Okay, break over. Track 2 continues with our panel presentation on corporate responsibility, but first, I want to have a word from our session sponsor, Eastern Alliance Insurance Company. Eastern Alliance Insurance Company provides workers' compensation products and services, as well as risk and claim management, fraud prevention, and other related services to businesses and organizations. Eastern Alliance Insurance serves clients in the United States. Thank you to Eastern Alliance Insurance Company for your sponsorship of today's session on nonprofit corporate responsibility. We certainly could not do it without you. Fresh outlooks, better outcomes. Your nonprofit's board of directors exists to make sure that your organization fills its mission. It's also responsibility for making sure that the organization meets its regulatory obligations, keeps its promises to the public, donors, and beneficiaries. The board has to manage the fiscal, legal, and ethical responsibilities related to your organization and its mission. Today's panel will address some of these and other issues facing nonprofits from a corporate responsibility perspective. Today, we have some of our kidschance professional affiliates. I call them my personal dream team, frankly. Jay Waldman from Waldman Law Group, who is our attorney. Brenda Masters-Stout, C.P.A. Fleming, Tawfall and Company, who is our accountant. Andrew Nichols, account executive at Murray Insurance Associates, who is our insurance representative. I'm going to begin by letting each panelist introduce themselves briefly and share just some thoughts on what they feel is most important for board members to understand about their respective industries, legal, accounting, insurance. We're going to keep it to a couple of minutes, and then we're going to open it up to questions. I'm going to start asking questions, and I encourage everybody on today's call to put questions in the chat box so that we can make sure that we hit all of your interests and all of your questions. So Jay, why don't we start with you?
Thank you, Vicki. I'll try to keep this brief. Very difficult for a lawyer, but we'll do the best that we can. As Vicki said, my name is Jay Waldman. I am president of Waldman Law Group. We specialize in corporate law and focus on nonprofit corporations. We provide a lot of advice to directors of nonprofit boards. Directors of nonprofit boards are primarily volunteers. And a lot of times when we volunteer, we think that there's no risk to ourselves from volunteering because we're just doing good for the community and we're following what the mission of the organization is, and it's something that's very important to us, and so we're going to pay attention and act the way that we're supposed to act. Unfortunately, my brethren don't feel the same way, and so we have to protect you guys, especially nonprofit corporation directors, from people who are going to try to do harm to our organizations. Directors of nonprofit corporations are fiduciaries. And that means that you hold a position that requires trust, confidence in the exercise of good faith and candor. You run into trouble if you act outside of these fiduciary responsibilities in connection with three primary areas. You have a duty of care, a duty of loyalty, and a duty of obedience. The duty of care requires you to act in the same manner as an ordinarily reasonable person would act in connection with their own affairs. So if you wouldn't do it for yourself, you shouldn't do it for the company. The duty of loyalty means that you don't take an opportunity that is presented for your nonprofit and take that opportunity for yourself so that you can financially benefit from that. And the duty of obedience means that you follow the articles of incorporation and the bylaws and the mission that is set forth in those documents and act in accordance with the mission of what the organization is. So it's important to understand the mission as it's written, not as we think we know what it is. Those are the primary duties. If you violate those duties, you do run risk of exposure and having legal responsibility for actions if they act, if there's a negative result against the company. Otherwise, you're pretty much protected. A great way to protect yourself is with D&O insurance, which we'll talk about a little bit later. But my role and the role of people like me is to protect directors of nonprofit corporations from exposure to liability and allow you to focus on what is really important, which is the mission of the nonprofit.
Thank you, Jay. Brenda, how about we continue with you? Brenda?
Oh, I'm sorry, you're cutting
That's
out.
I'm sorry.
My name is Brenda Masters-Stout. I'm a C.P.A. partner of Fleming Tawfall. We've been in business for about 50 years, and I've been doing this unbelievably for over 30 years. When I think about my job, the best part of my job is helping people, whether it's helping them to save income taxes or helping nonprofits improve their internal controls. That's what I like to do. That's what I get satisfaction from. And I have the feeling that all of you listening feel the same way. You want to do good for your clients and you want to help the kids. And hopefully from this session today, I can give you something that you will learn and take away to help you.
Thanks, Brenda. Oh, I'm sorry. Go ahead. Finally, Andrew.
Cool. Thanks, Vicki. First, I want to say thank you guys for having us and allowing us to kind of speak and share some insights. I'm happy to be able to do that. So my name is Andrew Nichols, and I'm an account executive at an insurance agency called Murray Insurance in Lancaster, Pennsylvania, which, fun fact, most of you probably already know, but home to the Amish. So I know most of you guys have been waiting on pins and needles to hear me talk about insurance and spew and jargon, because it's the most interesting thing in the world. But I'll just give you guys a brief update on some coverages that'll be important to what you guys want to have in your policies. Two of those coverages being abuse and molestation coverage and cyber liability. So abuse and molestation is specific to nonprofits, and recently over the last few years has changed in the insurance industry vastly. I'm sure you guys have seen unfortunate stories in the news and the Me Too movement, and a lot of allegations that have been coming to light. So some of the things that you guys as nonprofits and board members will want to do is to really solidify your employee handbook sexual abuse and molestation policies. Obtaining coverage for abuse and molestation through insurance companies has become a lot more strict, just because of a lot of the recent claims that have come to light. So coverage limits are becoming harder to get, more robust limits. So a lot of insurance carriers are going to want to see those sexual abuse and molestation employee handbook policies really firm and in place in order to offer those higher limits for the exposure that you guys have. The other coverage is cyber liability. So not specific just to nonprofits, but it is very significant to nonprofits because there is a large exposure that you guys have working with different vendors, kind of having a lot of personal information from clients and vendors and whatnot. So having a standalone cyber liability policy is very important to have. Working with a insurance carrier that specializes in these coverages from ransomware and malware. I'm sure you guys have all seen the stories of the Targets and Walmarts and whatnot, but it's actually affecting every industry and every business to the point where premiums are starting to increase 20, sometimes even 50%, just because the amount of claims from litigation that is involved. So it's still fairly newer of a coverage, and it's still pretty easy to obtain. So it is important to really invest time into making sure that that coverage is in place, just like you have property coverage and all your other liability coverages. And I'm more happy to talk into more detail on that as we go.
Okay. Thank you, Andrew. Thank you, Brenda, Jay. I'm going to get started with a few prepared questions. And again, I encourage everybody who's listening today to throw your questions in the chat box, and Linda will be monitoring those. I'm going to start, by indicating who I'm directing the question to, but I encourage after that answer, the other people on the panel to throw in their thoughts as well. So I'm going to start with you, Brenda. When do you know that your organization has moved from needing a 990 to needing a full audit?
Well, a lot of people think that the IRS controls that. The IRS just deals with the Form 990, which is similar to an income tax return for a business. And for a financial statement audit, the IRS really doesn't have any authority. There are 3 reasons why you might need a financial statement audit for a nonprofit. First would be if your state requires it. And there are, of course, 50 different state rules. In Illinois, for example, if the nonprofit has over $300,000 of revenue, then they have to have an audit. The second thing is, speaking of revenue, money coming in, if your donor, your grantor, or maybe your lender, the bank, requires you to have an audit, then you would need to have one. And of course, last is simply the board of directors may want an audit anyway for transparency. They want the community to know that things are being done correctly, and they'll use that as a marketing tool.
I'm going to ask a follow-up. Is there an amount of revenue that's usually a pivot point in those? I mean, if an organization is raising $50,000, for instance, does it make sense to do an audit? Is there a level of income that sort of makes that make more sense?
Again, the first 2 reasons that I mentioned, they're required by state law or by a donor or lender. But the other reason, just optional, the board wants to have one, that's really the board's decision. I do find that many boards, because of liability issues like Jay was mentioning, they will want an audit because they feel more comfortable having that. If the board, if the nonprofit's very small and their budget is tight, audits are expensive. And yeah. I don't push people to have one if it's not necessary.
Jay or Andrew, do you have anything to add to the audit piece?
Not really. The only thing that I would say is sometimes an audit is required, like Brenda said, under state law. In Pennsylvania, we have the Solicitation of Funds for Charitable Purposes Act, and there are certain thresholds that require you to make a filing with the state in order to be able to solicit funds. And in connection with that, the state is looking for an audit. So okay. Check state law.
So here's an interesting question. I'm gonna direct this to you, Jay. Can nonprofits make a profit?
They can. And there's 2 ways to do it. You can make a profit in your primary business area. You have to spend the money in connection with your mission, but yes, you can make a profit. If you make a profit in an area that is outside of your mission, you have unrelated business income, and you're going to have to pay taxes on that. And a lot of folks think, well, I'm a nonprofit, I don't ever have to pay taxes. Well, actually, you might if you make money that is outside of your mission in which you got your 501c3 status. But as a primary rule of law, yes, you can make a profit as a nonprofit organization.
Anybody want to do a follow-up there?
I agree with Jay. I think that law with unrelated business income was put into place mainly to stop people from cheating the system, so to speak. They have a business, they make a profit, and they try to hide it and not pay taxes by claiming to be a nonprofit.
Right.
Unfortunately, what we see is that sometimes that hits the nonprofits who have good intentions unexpectedly. So it can be a complex area.
Andrew, anything to add?
No, I mean, I agree with Jay and Brenda. They provide a lot of insight from an insurance standpoint. I mean, showing a profit, carriers will just know that there's stability there, and it's not going to change how they rate something or offer coverage.
Okay. All right, I'm going to direct this one to you, Andrew, and it's something that we talk about all the time. We require it of our, member state organizations as part of our in good standing requirements, and that's about D&O insurance. So as a standard for organizations like kidschance state groups, what should the D&O insurance include?
So I would say, to start off, the most important thing that you want to do is you want to partner with an insurance carrier that specializes in nonprofits, because they're going to provide a D&O coverage, but there's going to be additional enhancements in that are geared towards the coverages needed. Some of those coverages being defense costs, maybe outside of the limit. So what that means is, if you have $1 million directors and officers liability limit, there's going to be an enhancement coverage that offers defense costs for any litigation outside of that limit. So it's whatever your defense costs, that's separate from the $1 million aggregate limit. So you're not going to be breaching that, which is important because we all know that litigation costs from an allegation can get pricey. Another thing that you would want to look for is in the definition of who is an insured. So a lot of times an insured would be a volunteer or employee, the board themselves. But many times working with a carrier that specializes it, there'll be a much broader definition. So there will be coverage for maybe a past executive director or spouses or whatnot, for maybe things that come to light after they leave. And so there would still be a need for coverage there. Another thing too that you want to look for, at least ask and have a conversation, is if the insurance carrier is comfortable putting that directors and officers coverage under your umbrella coverage. That's just going to give you an additional layer of protection, and offer you more coverage.
Jay or Brenda, do you have anything to add?
One of the first things I do when I form a nonprofit corporation and we're having our organizational meeting of directors is I discuss with them the importance of having a good D&O policy. We all want to be protected from any types of potential liabilities as long as we're not doing anything silly. But one of the first things I do is I tell my boards that they need to authorize somebody to go talk to someone like Andrew and make sure they have the appropriate coverage in place, because in today's world, it's too big a risk for you to take a step off of the center line.
Brenda, to you, and the participants are saying they're having a hard time hearing you, so you may need to get closer to your microphone. Sorry about that. Anything to add there?
Personally, I have an umbrella policy personally because I sit on so many different boards. So that's something to consider.
Okay. All right, good. I'm gonna direct this next one to you, Brenda, to start. What policy procedures should be put in place for reserve funds and restricted funds from an accounting perspective?
It's pretty mechanical, really, the actual process of keeping funds separated. You typically would want a separate bank account But really, the hardest part I have with reserve funds is knowing if they're restricted and why.
Mhm.
If a donor gives you money, for instance, Aunt Gerda's estate gives you $10,000 and she wants it to be used for education, that's very vague. So you need to understand clearly what the restrictions are. I would recommend following up at the time of the gift, talking to the donor. Jay might have more legal perspective on that, just to make sure that you know those restrictions. Then dealing with them is pretty easy.
Jay?
What I recommend and advise my clients on is to make sure that they have clear instructions from the donor or the donor's heirs if it comes under a will, because you want to make sure that you can use the funds. What you don't want is to ever have a situation where you have a question of whether or not you can spend the restricted funds, and then wind up having somebody question your decision on whether or not you could spend it. So I always ask for clarification and try to get as explicit instructions as possible. And then what we do is I generally advise my treasurers maybe once a quarter or once every 6 months that when they're going through their financial reports with the board, that when they get to the restricted funds part, they explain what the restrictions are and what they're anticipating using the funds for, or if they're just going to hold them until a proper moment comes.
Can nonprofit organizations decline restricted gifts?
They can.
Okay. So
They can.
in other words, if
sorry.
it doesn't, I was going to say, if it doesn't fit their mission or their guidelines, they can turn it down, basically.
That's right.
Okay.
That's right.
And,
for example, if you had somebody who said, I make a restricted gift of funds to kidschance, we'll pick on Pennsylvania because that's where I'm sitting, but they have to use the money for engineering purposes and not necessarily for the actual mission of kidschance. And we could turn that down and either ask them to make it unrestricted funds or to further clarify what they're talking about. If they want an engineering program for children of injured workers, okay, that's fine. But if it's just engineering in and of itself, I'm going to have trouble pigeonholing that. And I'm either going to turn it down or I'm going to require a more explicit direction with respect to what the restriction is.
Is it fair for nonprofits to have in their policy something that states that if the exact restriction does not exist, they are able to use that money in something that is close or similar to?
As long as the donor understands that, and you make it clear to the donor at the time that they're making the gift, not at the time that you use the money, make it clear and get the donor's consent that that's what is permissible to them, then yes, that's fine.
So it sounds to me like it would be good to have a restricted gift policy in place before you actually get the restricted gift. So you have some time to think about these things, right?
I always prefer it. Rarely happens, but I prefer it.
I know.
And it's frustrating. I have a client who has some restricted gifts and they have been unable to use them and they're just sitting there.
Yep.
And every year it's just sitting there. So getting that clear cut right from the beginning.
Okay, I'm going to move on to my next question, and this one I'm going to direct to you, Jay. How do kidschance organizations adequately protect the privacy of their student recipients?
Wow, what a great question.
Wasn't it, though?
It is. I like it. The way that they protect it is the way that they protect any of their other private confidential information. You just don't disclose it. You keep it private. This information it's not public information. It is public as far as, the board is going to know who the recipients are. And if someone asks the organization in accordance with its mission, then we can tell you who it is. But we're not going to publish a notice in the newspaper that says, Susie Sherman received a scholarship because that information is not necessary for the public.
What if the student releases the information? And what would that release or waiver entail?
Well, the student is always free to release the information because it's about the student.
Right.
I would get a waiver because I don't trust the people in my profession to not come knocking on our door and try to rattle the chains a little bit. But it's a simple waiver that is almost along the lines of any type of publicity that if you're giving an interview and you're going to be broadcast over, you're sitting there on The View or on something and people are going to be watching you and there's going to be replays and you have to give your consent to allow them to replay. It's that type of consent. A couple sentences, but it's important. It sure does save you in the long run.
Andrew, Brenda, anything to add?
Yeah, I would just kind of come in and comment on like sensitive material that you're having, like storing on the computer. That's where your cyber policy is going to come in, that you're going to want to protect it there. So just like you would back up your data and use antivirus software, things like that, work with a third party to protect that sensitive information. A cyber policy is just completing the pie in a sense of your protection, because in case a hacker does get in and puts malware or is able to get that information, the policy will respond from, any defense costs if there were to be litigation, or notification costs if you have to tell people, tell different vendors or that specific person that their information may have been compromised. That can get pricey too. And this is where that cyber policy really comes into play.
Okay. Let me move to a question for you, Andrew. Is liability insurance needed for our kidschance organizations? And if so, why and to what extent?
Yeah, so without going into so much detail, there's a lot of liability coverages. Sure, you guys know, general liability being your main coverage. That's your third party coverage. For example, someone comes onto your property and slips and falls and hurts themselves. That's going to be your general liability policy. There's also employment practices liability. That's going to pay for any sexual harassment or wrongful termination or things along those lines. So each liability policy plays its own part, and they're each valuable and important in their own way. So that's kind of what my advice would be, is to really look into each one. Employment practices, general liability, auto liability, umbrella liability, all of those things play their role.
So many of our organizations do large gala events where alcohol is served. Is there additional liability that needs to be taken into consideration there? And what if underage students are attending events like this? So the important thing there is really to communicate with your insurance carrier, insurance agent that you work with details regarding what type of gala events, how many events there are, because a lot of times you will need a special event policy. Now there's going to be liquor coverage involved in that. But a lot of times those
companies are going to want to know what practices are in place, are IDs being checked, things like that. Is it a third party that's going to be serving, like a catering business going to be serving the alcohol? If that's the case, it's always recommended to require the catering business or that third party business to supply you with a certificate of insurance. And another recommendation on top of that certificate of insurance is to be named as an additional insured on that caterer's policy. That's just deflecting any potential incident back to their policy if they're the ones that are going to be causing that.
Anybody else have anything to add to that? Jay?
A lot of times what I see is organization, or like hotels. If you're having your gala in a hotel, the hotel will require you to use their staff to serve the alcohol. It's a hotel policy. It is also LCB policy, and it's just a good idea. And then Andrew's absolutely correct. What you want to get there is a rider from, or a certificate from the hotel where they name you as an additional insured if the hotel winds up serving someone who's underage or someone who's so visibly intoxicated that they go out and get into an accident.
Mm-hmm.
Which is interesting, because most of the time the venues are asking us for our insurance company or our insurance coverage, and you're saying that we should be asking them that we are another insured. That's pretty interesting.
Yeah, it goes. Yeah, it should go both ways. If they're going to ask you, you should definitely ask them. And if they're performing some work for you, you want to be named or asked to be named as an additional insured on their policy.
That's interesting. Brenda, anything else to add?
From a tax standpoint, don't forget, if you're serving, you need a license, at least in the state of Illinois.
Yep.
And not just from the state, but from the city.
Okay, so that's like a big issue. I learned something there. So this should be I shouldn't just be supplying my insurance policy. They should be supplying something back to me. Very interesting. Okay, this one's coming to you, Brendan. And again, stay close to that microphone. Should there be basic HR policies in place if you have employees or subcontractors?
Yes.
And what might they look like?
That goes in HR policies for just day-to-day operations. Of course, auditors were all about documentation and policies, but the process of writing the policies helps you be a better organization. It makes you think through scenarios and be prepared. Also, because nonprofits especially have high turnover, new boards, new executive officers every year or two, having those policies in place for them to rely on and to review is very, very helpful.
Anybody else have a response to that, Andrew?
Yeah, I would say an importance too is to have, when you have those policies, really have volunteers, employees, boards, not just like sign off on them when they start, but annually, kind of bring it up annually, maybe do a training and have them really sign off so they're acknowledging that they've read and they understand what those policies are. Another kind of value of being with a carrier that specializes in nonprofits is they themselves will have resources, or a lot of them work with third parties that could offer like sample policies. If you need help writing a sexual abuse policy or an anti-discrimination or something like that, they'll have sample policies and some other resources on top of that too, provided for you.
So if you're starting as a group, as a nonprofit, to be able to build these policies, a good place to start is with your insurance carrier, because you should have some templates for us.
Yeah.
Jay, what are your thoughts?
I like to have the policies. I think the insurance companies do a great job of providing the templates. And then because I can't resist the urge to have comments, I always add a couple of things. But primarily, I like to put in my policies, or advise my clients to put in our policies, information so that they can make a determination as to whether the volunteer or the person is an employee or an independent contractor. Because if you're wrong, the penalties and the audits that you go through with the state are kind of painful. And I like to be able to give the board an opportunity to take a look and see what the test is. And so that they can take a look and say, well, we're not doing this right, or, you know, our executive director is doing exactly what she's supposed to be doing under the policy.
Is there a need for an operating manual? I mean, we're talking about a lot of policies and procedures. Is there anything that requires nonprofits to have an operating manual? It's a toss-up question.
I'll start because, again, I can't resist talking. There's nothing that requires you to have an operating manual. I generally advise my nonprofits to have some type of manual, policy and procedure manual, and from an operations standpoint, so that you know what everybody's job is. Because as you said, Vicki, there's so much turnover in the nonprofit world. If your executive director leaves for whatever reason, we don't know what you do. Yeah. And so to have someone
huge shoes to fill there, huh?
Yeah. It is. And to have someone come in and, well, you know, I worked for this nonprofit over here, and this is how we did things. Okay, well, that's great, but your mission was also over here and not over here. And so to know what everyone's job is, it helps the organization transition a lot more efficiently if you know what your job is and what the job is that you're trying to fill.
Any other comments?
I agree with Jay there. I mean, there's not a specific requirement, but having the clarity and definition of what the mission is, it's important to have, and to have everyone kind of following that. That's why I always recommend kind of going to someone like Jay, who has expertise in these policies and whatnot, to provide his advice to the different nonprofits.
Brenda? All of the above?
Time consuming.
Yeah.
And keep it up to date. We go through ours every year.
Mm-hmm. Yep. I was just going to say the same thing. That would be a yeoman's job at this point to actually do that. But I can see the sense, especially in continuity of the organization. I'm going to stop here. Linda, do we have any? I can go on for hours with my questions. Are there any questions from the participants that have come in through the chat?
Not so far.
Okay, then I must be doing a pretty good job with my questions. That's okay. Let me move on. This next one is for, I'm trying to find number 8, is for you, Jay. And this is a big one for us. Should kidschance organizations, whether that be the national organization or our state members, have a policy on interactions between youth and adults?
The simple answer to that is yes. And the better answer is going to be filled in, I believe, by Andrew, because we're going to have an insurance policy recommended because the interaction between youth and adults in today's world is just fraught with peril. And so, Andrew, what do you look for as far as implementing a policy for your nonprofit clients?
Yeah, so like you said, it's going to be a requirement to get any like abuse and molestation coverage. Having a policy like that is going to be a requirement before you even can look into getting those coverages. So what we're looking for on the insurance side of things is like clear definitions of what interaction is, what is specifically not allowed. You want to know if an incident happens, what's the response going to be? Is there a specific person that's designated that you report to and they handle it? So really kind of outlining what exactly is not allowed and that it's zero tolerance. And then what happens when there is an incident? What's the response like?
Go ahead, Jay.
I'm sorry, Vicki. If you have a zero tolerance policy, you have to follow it.
Mm-hmm.
You can't make exceptions for somebody who's been there for 30 years and is just an old timer who doesn't know better. Zero tolerance means zero tolerance.
Mm-hmm.
And you have to act in accordance with the policy or you're going to blow your opportunity to be covered.
Right.
You're going to have a policy you can't use.
And I will say, if there's instances where you can't have a zero tolerance policy, say there's some exposure where you just can't avoid, highlighting what is acceptable and what is not acceptable.
It would make much more sense, I think, to call this policies on youth interactions with adults than abuse and molestation policies. Just saying, like if I had a recommendation to make to the insurance agency, abuse and molestation policies are just, it sort of has a very negative connotation. We talk about having guidelines for interactions between youth and adults, especially, those that could be underage. In some cases, I think some of our state organizations are hosting families who actually come. So it's could be both parents or one parent, the scholarship recipient, and younger siblings that are there at an event. So I think that according to what I'm hearing, it makes sense that our organizations begin to think about at least some guidelines about what should happen and what should happen in those situations.
Mm-hmm.
That's what I'm hearing. Okay. I'm going to go back to, I'm going to throw a toss up out here for the group. I think it's probably in Jay's or in Brenda's ballpark. What are the requirements for acknowledging charitable contributions?
It's pretty easy. The IRS requires that if you receive a donation of $250 or more, you acknowledge that. Typically for something like kidschance, I would see a thank you letter. You need to have the list, the name of kidschance, the amount of the contribution, and the date. The date is important because after all, people are going to deduct this on their tax returns, so we need to know when it occurred. If it's not cash, then you need to describe the item, but you don't have to put down a dollar value. And you also need to make an acknowledgement if there was a quid, something they received something. For instance, you had a $500 ticket to the annual dinner, and you might note that $25 was the cost of the meal.
Okay. Anyone else have something to add, Jay?
No, it's very mechanical.
Follow the IRS instructions.
As much as I hate to say so, yes.
Do our nonprofit boards assume any responsibility or liability for activities of board members outside of their role on the nonprofit?
There's two answers. So I'll give you the first answer from the left side of my mouth and then the second answer from the right side of my mouth and talk out of both sides like a good attorney does. The simple answer is no, from a legal perspective, that if a director is acting not in accordance, not as a director of the nonprofit, but out in the world doing whatever he or she does, that from a legal perspective will not come back on the nonprofit. However, you run what's called reputation risk. So that if you have, let's say I'm on your board and I'm a baseball coach and I go out and during the baseball game, my player gets called out at home and we lose by a run and I go absolutely berserk. And I'm yelling and screaming and I get thrown out and I'm suspended for a couple of games and all kinds of bad things happen. And the next thing you know, my picture with me and I would say my hair going all over the place, but that's not going to happen. But there's a picture of me in the newspaper and, you know, Waldman gets thrown out of a game and Waldman this and Waldman that. And the next thing you know, there in the article is, and Waldman on the board of kidschance of Pennsylvania. And the next thing you know, the reputation of the organization is hurt because of an activity I did outside. So I always worry about reputation risk as opposed to legal risk in that perspective. And that's another reason to choose your board members very carefully, because you want to make sure you don't have somebody who's going to do something silly.
Anybody else want to comment on that one?
I think Jay made a good point where, I mean, it's important to know who your board members are and make sure that you have reputable board members on there. From an insurance standpoint, it's hard to really say if a claim is ever going to be covered or not, because it depends on what the trigger is that caused the claim. But most of the times, if it's something that's not in the scope of that person's job sitting on the board, it's not going to be something that would be included under the coverage.
Okay. Linda has a question from the field.
Do.
Okay.
Here it is. Including donor logos on a kidschance webpage considered quid pro quo?
Great question.
That's a great question. Who wants that one?
Nobody.
You want to start?
Even Jay doesn't want it.
Because we all do it. So, you know, what is the answer to that, Jay?
Well, like you said, we all do it. So is it quid pro quo? I suppose if you have a policy that says for anyone to advertise on our website, it's going to cost you $100 a year. Well, you just fixed the cost of having their logo on your website. Even if the logo is there because let's recognize our sponsors. And
right.
You list all the sponsors and, oh, in addition to our sponsors here, we have these four, advertisers or whatever. And they, parens, they've all paid us $100 to be on our site. Yes, it's a $100 donation, but at the same time, you set the price at $100 and that's your quid pro quo.
What if it's a case where you have the partnership or the sponsorship agreement, and as part of that, you are voluntarily putting their logo on your website, but they're not paying to have that space?
That's a very nice distinction. I don't know that that's going to get you anywhere if you have the wrong revenue agent sitting across the table from you. Because what they're going to say is your donation would have been $5,000 instead of $4,000, but it was $4,000 because you got to put your name on their website.
Actually, when I think about this question, a business would prefer to have this considered advertising rather than a contribution. Many businesses, it's complex, but many businesses don't end up being able to utilize contributions, but they can deduct advertising costs. So actually, it might be to the benefit of the business for it to be considered an advertising fee.
So if you look at the fact that I would go as far as saying in most cases, the conference sponsorships and the partnerships that we get at kidschance are coming out of marketing and promotions budgets, not charitable donations. Does that make a difference?
I don't know that an IRS agent is going to look at your line items for your budgets, but again, I tend to, for my business clients, treat donations such as the sponsorship for this session as an advertising expense.
Yeah. Andrew, anything to add?
I mean, this is where your general liability coverage would really come into play from a personal and advertising coverage that's included in that. So if you're putting logos on your website and there's potentially some defamation or something, that's what you're going to need that coverage for.
So if you have a treasurer, very well-meaning treasurer elected by the board, and part of their responsibility is to stop by the post office box on a weekly basis and pick up the checks and then drive them over to the, TD bank and deposit them. Are we assuming any risk with that?
Yeah, well, yeah, from an insurance standpoint, there's some potential employee theft or crime coverages there. So those are definitely things that you want to look into. There's different limits that you can purchase, and depending on how much cash is being moved around, you'd want to make sure that you have a high enough limit in case someone was embezzling or something like that.
Jay or Brenda?
I agree with Andrew.
From my perspective, to be honest with you, it's the hardest thing to audit.
Yep.
If you get a $100 contribution and it is stolen, how do I know?
Yep.
Odds are I don't.
Yep. Linda, do we have any other questions from the field?
I don't see any other questions.
I'm just going to give everybody on the panel one more second to go around and just say, after today's conversation, do you have one piece of advice you'd like to leave with this group before we close up the session? And I'll start with you, Andrew.
I guess just the piece of advice that I would say is on the insurance side of things, you really want to make sure that you're working with a trusted advisor that is going to work on your behalf, put you with an insurance carrier that specializes in nonprofits, that's going to have those resources or third-party resources that can offer policy assistance, what I was talking about earlier, maybe some discounted background checks, some training videos, things like that, that'll really help you strengthen the overall mission of kidschance.
Brenda, how about you?
I think the most challenging thing for all nonprofits right now is membership.
Yep.
Having good members who want to be active, who want to serve on the board, it's tough, and I think it's going to keep getting tougher. And don't soft sell it. I myself have been guilty of that, telling someone, please serve on the board. It's not that much, not that hard. It only takes an hour once a month for a board meeting. The truth is, you need to prep for the board meeting. You need to be on a committee. You need to participate in events. And if you don't have a good board member who wants to serve, don't bother. And we're all going to struggle with it in the future.
From your lips to mine ears. Jay, final words of advice for all of us.
I think it's really important that you put together a professional team that all works together, that the attorney and the accountant and the insurance agent are all on the same page. What you don't want is a lawyer who has his own ideas or her own ideas as to the way things should go, and they don't coordinate with what the insurance coverages are and the lawyer is rogue and doesn't listen to the accountants with respect to how things need to be done at the end of the year in order to do the 990 or to get the audit done correctly. So I think it's critically important for the directors of a nonprofit corporation to have a team that works as a team and not as a group of 3 individuals or however many individuals we're talking about.
Great piece of advice. Great piece of advice. And here is the Kids Chance of America team. Yay. Thank you very much. This was a great session. You all know who you are now. I certainly have learned a lot. I see where we have to start linking insurance with attorney and accountant a little bit more. And we certainly need to work on, Andrew, our policies. We have recently established, under the leadership of President Ken Martino, a governance and ethics committee that is going to be working on just that. All of the policies and procedures that we need. Hopefully our activities at the national level will also help the state organizations as we move through. So again, I want to thank you for giving up your time. I know you're all very busy professionals. This has been great. I want to thank everybody for that. And I'm going to let us take a quick break before we start the next session. And you all can sort of depart and get back to your day jobs. Thank you very much.
Thank you, guys.
Thank you, everybody.